Good morning and welcome to this Tuesday, September 12th, 2023 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist at Earnings Beats, and I'll be here to kind of walk you through the next 30 minutes or so as we prepare for the trading day ahead. Let's see, taking a look at futures. Currently down a little bit. We've got the Dow futures down at about 37 points. S&P 500 futures down about 10, Nasdaq futures down 45. On a percentage basis, a little bit higher downside so far on the Nasdaq. Crude oil prices up $1.14. We're now above $88 a barrel. Excuse me, approaching $88.50. And we got the 10-year Treasury yield at 4.29%. The Treasury yield is going to be really interesting because we're pretty close to that key 4.35% yield resistance. And we've got the CPI report coming up tomorrow. That'll be out at 8:30 Eastern. And then we've got the PPI out on Thursday at 8:30 Eastern. So a couple of big inflation reports coming up. And then, of course, the Fed will be meeting next Tuesday and Wednesday. At this point, I'd say that the odds are that the Fed will continue to pause, but let's see what they have to say, because sometimes their wording is, bigger than their actual actions and what they decide to do. So I don't know. Will their wording change? I mean, we've seen some reports that still show inflation lingering. We got other reports saying, hey, it's getting under control. The Fed has taken the conservative approach, and I can't blame them from that perspective. They want to make sure that they have stomped out inflation. The biggest problem I have with it is their communication to the market and how that's kind of changed and evolved over the years. I mean, if you recall, and I'm not going to blame them because I was in the same camp, but if you recall back just a couple of years ago, they said, hey, this is transitory. There's really no inflation, don't have to worry about things. And they were just letting everything go, leaving the policy basically unchanged. And I think right now in the current situation, they seem to just be putting more and more emphasis on inflation, while all the reports seem to indicate, or most reports seem to indicate, that inflation is moderating. So where do they go with all this? What happens with the CPI and the PPI the next 2 days? What I do think we could see is higher than expected headline numbers. And when I say headline numbers, I'm referring to the fact that the headline numbers include things like food and energy. And of course, what the Fed really concentrates on is the core inflation level. So they're going to be looking at the core CPI, core PPI, which strips out the energy and food. So I think the core, I'm expecting to remain pretty tame. I think expectations of both core CPI and core PPI are at 0.2% for the month of August. But the headline number, I think, was 0.6%, I believe, on the CPI. I'm not sure. I don't recall what it was on the PPI. But those numbers, and I usually don't pay too much attention to them, but sometimes the media likes to. And so we might see numbers jump. I mean, crude oil prices have been on the rise, have been steadily moving up. That could trigger a little bit bigger headline number than what's expected. I don't know. We'll have to see. Anyhow, that's what we're kind of, waiting for here over the course of next week. I believe if the bears are going to inflict any significant damage, it's likely to come between now and the end of next week, which is the getting past these inflation reports, getting past the Fed meeting, and even a couple of days past the Fed meeting, because we know there can be a lot of volatility after that meeting. So let's get to the end of next week. And if the market is still holding up key support levels and so forth, I still think we're going to have a big run going into the fourth quarter earnings reports. We'll see whether or not I'm right. A couple of discretionary stocks, which I'm sure you're familiar with. We're going to talk about those in a minute. They really helped the market yesterday. Big advances on a couple big names. But again, we'll talk about that in just a second. Let's go ahead and jump in. And we will talk a little bit about what happened yesterday. So we got the Dow Jones Industrial Average that finished up 0.25%. S&P 500 up 2/3%. The Nasdaq was up 1.2%. Mid caps only up 0.1%. Small caps only up 0.25%. It was really strange. The Nasdaq got off to a little bit bigger jump at the open, I think, than the Russell 2000. What I do know is that there was a lot of jockeying in the first half of the day. Seemed like the Russell 2000 was going to start to take off, and the Nasdaq was going to lag. Excuse me. But that kept flipping throughout the day, and then in the afternoon, the Nasdaq kind of took off, and the Russell 2000 lagged. And so that intraday relationship that I've been watching really closely actually took a turn for the worse in terms of small caps and that IWM. We'll see if that continues. I mean, I'm kind of watching this, not really from a big picture. I'm not talking about years and years, but from the last 3 to 4 or 5 months. That's the picture that I've been watching between the QQQ, which is the Nasdaq 100, and the IWM, which tracks the Russell 2000. Those are the two that I'm really watching closely. I believe they're all going higher. And I'm not talking about this week. I'm talking about into year end. The next week to 10 days, I do think that, we could be in for, I'm not sure what we could be in for. I mean, we could see some selling here over the next week to 10 days. I wouldn't be shocked. Or maybe it's just, sideways action, which is what we've been seeing here for a while. I don't know. But we do have to get through this next 10 days. I know that there are going to be some significant reports. I think these are reports that the market could respond to either positively or negatively. I mean, I guess that's the case with any report, right? But I think from a short to intermediate term standpoint in the major indices, I think it could make a big difference. I think this is which way we go here is going to carry some more weight as we head into the fourth quarter. So anyhow, transports were up about 0.5% yesterday. That is clearly in a downtrend right now, but it does follow a period of serious, significant rise in price. And so, I think we're pulling back, and I'm going to go ahead and pull out this transport chart, go back about 12 months here so that you can see the prior high, which really didn't last too long. We got up to about 15.6, and we had this sideways action down in here where we had topped out mostly right around 15,000, but you could even see 14.6, 14.8 on some of these peaks. I don't know if transports are going to go back down there. I don't suspect they're going to go back down that far, but a lot of the selling that we've seen in the transports, I think, is a result of the fact that we just went up so fast. I mean, we could put, a Fibonacci retracement. Take a look at that. In fact, I'll go ahead and do that. Let's just go right here from where it really started from. And what you do with Fibonacci retracement, if you're not familiar, is you go from the bottom to the top of the advance, and then Fibonacci retracement levels. It's the 38.2, 50, and the 61.8. Those are the three levels that you tend to watch to see what kind of recovery or what kind of a pullback we might expect after a lengthy advance. And in this case, the 50%, which is the one that I generally watch, is at 15.20105. Yesterday, we hit 15.214. So from this advance, or from the low to the high throughout June and July, that 50% pullback would be back to about the 15.2 level, which is where we are. The 61.8 level would be all the way back down at 14.845. So closer to some of the other support levels that I talked about. We'll see what happens here, but I suspect we're getting closer to a bottom here on the transports. This is part of the industrial group. Industrials love the month of October and especially love the month of November. So we've got two really big months coming up for areas like industrials and financials. And I'm just talking about seasonally. And I think the chart actually sets up for that as well, pulling back as we go through September and head into two of the best months, or the two best months for industrials and financials. Now, what does that mean, though, for the next rally? Because if the industrials and financials normally do well, it probably means other areas of the market don't do so well. And when it comes to areas like discretionary and technology, yet that is the case. Those areas tend to slow down a little bit when we get into the fourth quarter. So what we might be seeing, or what we may expect over the next maybe 1 to 3 months, might be just simply what we saw in the fourth quarter of 2022, when we saw industrials and financials do extremely well. And we saw almost a retest of the lows when it came to the Nasdaq. And that was because technology, consumer discretionary, and communication services all were struggling on a relative basis during that fourth quarter. But was it bad action on their part, or was it just normal seasonality? I would argue it's normal seasonality, because this is something that's been going on for a long time. Not just, let me give you a quick analysis of what I'm talking about there. So here is the XLI, and we can go back like just throughout this secular bull market, which is 2013. That's when the S&P 500 broke out above the highs from 2000 and 2007. That was our confirmation that we were getting the breakout and that a new secular bull market was upon us. 2013. So if you look back to that 2013, you'll see the XLI has gone up 9 out of 10 years in November, 7 out of 10 years in October. And look at the returns, the average returns, 7.5% between the two of them. And I mean, if you look back at any other period, I mean, November is easily the best month of the year. October was the third best. The only month that beat October was July. So you got the first and third best months of the year coming up throughout this secular bull market advance. And watch November as I go back even further here. Goes up to 91. That's 10 out of 11 years, 11 out of 12, 12 out of 13, 13 out of 14, and then it drops. So 13 of the last 14 years, industrials have gone up in the month of November. Almost 2/3 of the time they've gone up in the month of October. And over these 15 years, this 15-year period, October and November up 7.3% on average. That's a lot, 7.3% on average in just a 2-month period. And again, if you look back to all the months over this 15 years, only July stands in the way of October and November being the top 2 months of the year. So industrials love this time of the year. Also, let's just pull up the transports, because transports are just as amazing. Go back, there's since the secular bull market, averaging 5.4%. Then you go back, you just keep going back during that same period, last 15 years, averages 4.8%, goes up close to 90% of the time, or 90% of the months. October, almost 2/3% of the months, averaging 3.5%, 8.3% in transports. That's your average for October and November, the last 15 years. So yeah, these groups have pulled back. XLI's pulled back, transports have pulled back, but it's kind of a healthy pullback after a pretty lengthy advance. And now we're going into the strongest period of the year. So I'm looking for some leadership to emerge again from industrials and financials. If I look at the XLI versus the SPX right now, you can see it's been downtrending since peaking back in March. Let's put this on a solid line chart. And we'll go back, I don't know, a few years here. Oh, don't really need the AD line. Anyway, so here's October and November. This is 2020, XLI taking off. Let's see, here's October into the middle part of November. We did weaken here in the second half of November, but that was a up period. Let's go back over here. Actually, 2018, that was the bear market, if you recall. That was the trade war related bear market, but we went down along with just about everything else that year. 2021 right here, maybe a little bit down in 2021. Last year in 2022, this is what I was referring to. Look at October, November. Here we were to begin October, and here we were to end November, and then throw in December. I mean, it was a very strong last 3 months of the year. And here we are pulling back in September. But what I'm looking at is, if we annotate this, I mean, I could draw a trend line there, I could also bring this trend line over to here. Maybe go along this line. Either way you do it, we're still trending right now on a relative basis. We're still, even though we've come down the last month or so, we're still above the trend line. So to me, that's another reason why we should expect that we're going to see a bounce in the XLI versus the S&P 500. And if we do, that would be probably a good sign for transports, obviously for industrials, and more for the value-oriented stocks. And that's what I'm thinking, is that maybe we're going to see a little pause in the relative strength of growth stocks and maybe a little movement toward the value stocks. So those are just a few of the things that I'm looking for. Let me go back all the way to where we were. Sectors, look at discretionary. Discretionary had a huge day yesterday, rising 2.7%, breaking back above this downtrend line. If you connect the recent highs, getting back close to the high that we saw in the early part of August, and really not that far away from the July high. So really good action in discretionary stocks. Communication services also turning up, which is a good sign. Energy pulled back. That was the weakest group yesterday, down about 1.3%. But we've got crude oil prices back on the rise again today. The XLE is trending above the 20-day. I wouldn't be surprised if the XLE goes right back up to new highs. Why was discretionary, or why were discretionary stocks trading so well yesterday? Well, two stocks that make up about 45% of the ETF, Tesla and Amazon. Tesla was up 10%, Amazon 3.5%. Amazon made a breakout, or certainly went right up above, just above the recent high closes, recent high candle bodies to set a new high. So you got a breakout there with Amazon, and Tesla breaking kind of out of this downtrend move that we've seen. If you look at the lows or you look at the recent highs, this gap up and move up yesterday was nice. And Tesla's AD line looking really strong here. Amazon's as well. But if I'm going to give them props, I got to also say communication services weakening AD line, even though price is trying to go higher. That'll be something to watch. The AD line looks pretty good there on the XLY. Energy, I think, is still fine, although we'll watch to see if this low holds. Depends really on how we trade throughout the day. That's really what it comes down to with the AD line. Do we finish strong, or do we finish weak and near the lows of the day? If it's the latter, you're going to see the AD line dropping. If it's a strong finish, or at least above the middle of the day finish, then that's when you're going to see that AD line rise. Meta, big day, also helping to lift the communication services group. Of course, Meta, big part of the internet space. After trending lower, you can see that seems to have broken back to the upside. But this is one that, again, I'm watching that AD line, not really seeing the strength. So as I look across all of this, I see mixed picture. But here we are, it's September. I see a lot of mixed picture. And going back to the middle part of July, essentially, this is what I was saying we could expect. Sideways action, maybe a little bit of a move to the downside, relieve some of the overbought conditions. We've done all that. Remember, we had the negative divergences back in mid-July on the daily charts. They're gone. That's been eliminated. We don't have to worry about that anymore. So I think, again, the next week to 10 days, kind of what we've been seeing, a little chop back and forth. Maybe we rise with the CPI and PPI. Maybe we don't. What's the Fed going to do? Your guess is as good as mine. Sometimes they come up with little stingers for the market. We'll see if they come up with anything next Tuesday and Wednesday. Their actual release, their policy statement, is next Wednesday at 2 p.m. So that's the reaction that we'll be looking for there. All right, let's keep moving. 10-year Treasury yield. So the 10-year Treasury yield today, let me just make sure I got the latest here. Yeah, down not much. We're sitting at 4.26%. We were around 4.27 yesterday, so really not much movement there. But as I pointed out right here, 4.35% the high. And if you go back to October of last year, right there, 4.33%, that's going to be the level to watch on both of these. Or I say on both of these, I mean both of these tops. That's where we really want to focus our attention on this chart. Do we get that breakout? That could spook the market in the near term. If you're wondering, hey, what might take the market down a little bit, maybe take out those recent lows, I would say a big move up in the 10-year Treasury yield is one thing that certainly could be a catalyst for a move like that. So let's see what happens going into the report, and then see how the market reacts to it. The other thing to watch, even if the 10-year Treasury yield does break out and we move lower, what leads us to the downside? That's really important. If technology kind of just holds its own and discretionary continues to do okay and communication services holds its own, I don't care if the market pulls back, because to me, that's telling me Wall Street is not exiting those aggressive areas of the market. And if they're not exiting, I'm not exiting. And that's kind of where I've been sitting for a while. I follow the beneath the surface signals. And right now, most of those signals to me remain bullish. S&P 500, kind of I don't know. I mean, maybe this is, I talked about this when we were rising a little over a week ago. Maybe this is a little bit of an inverse head and shoulder. It could be a cup that's still forming. I'm looking off of big advances. When we start to pull back, I look for continuation patterns. Anything that I can spot that suggests, maybe this is, just bottoming, and let's look for a breakout at a certain level to kind of trigger the next advance. And when I look at the S&P, what I see is maybe a left shoulder right here, and then a little bit of a bounce. Probably if we look at an hourly chart, maybe it'll be a little bit clearer, or maybe not. Maybe let's go back a little ways though. So we're coming down. You can see maybe a little rally here, or even this rally. Either one of those, pick your pick whichever left side of the neckline you want. And I'll pick that first one. We'll annotate to show you what I'm looking at. I mean, it's not crystal clear, which normally if it's not a clear type of a pattern, then most traders aren't going to see it, and so probably not act upon it. But here was the high. Here's where we come down, potentially put in a left shoulder, neckline. We go all the way down to the low, which is the head, come back up all the way back to test that exact area at 45.40, and then back down. Pretty steep right shoulder, though, compared to the left shoulder. I like to see them a little bit more symmetrical. But if we go back up and we break 45.40, even if you don't call this an inverse head and shoulder, just breaking above a level where you've had a couple of key tops is good for the market. So watch 45.40 to the upside. I think that's the initial clue to look for. The recent low, to me, the big one ultimately is the recent high and that recent low down here, 43.40. The breakout above the August 2022 high was 43.05. So those are the two big levels to the downside for me. The two big levels to the upside first, 45.40, and then we get back up over that 4,600 area. All right, Nasdaq 100, very similar, kind of a look to the chart. There's the key high to watch. There's the key low. This is all sideways consolidation. Movement above the moving averages, below the moving averages, above the moving average, below, back above. This is what is typical during a trendless market environment. And that's what we have. When you go sideways, you don't have a trend. You're actually consolidating that prior gain. But when you have a prior uptrend, you look for a continuation move after the period of consolidation. So we're just stuck right here, in my opinion, in between these two key, the key top and key bottom in the short term. And which way we go, I don't know. Day to day, I really don't. But I do think end of this month, early next month, one of those, I think we're going to get another pre-earnings run, and I think we break out above 4,600. And I think the 4,800 level will be next. And I think we're going to hit it in the fourth quarter, maybe go through it. But I suspect by the first quarter of next year, we are going to be through 4,800, probably above 5,000. And that's just the way I see the market. We'll see what happens. Small caps, IWM. I noticed yesterday it marked the 5th straight day with the close below the open. And I went back and looked, and the last time this happened was right here in March. We went down, had 5 consecutive lows or 5 consecutive closes below the open. And then the other time that I saw over here was 6 times. But the interesting part is after these 6 lower closes, or at least lower than the open. So these 6 filled candles, that's what results when you have a lower close than the open. You have a filled candle. 6 filled candles. After these 6, what happened? Had a pretty nice advance. Here, after these 5, we gapped down, set a low right near the prior low, and we started to rally. Here, we're coming down. We're getting close to these lows. I don't know if it's going to repeat, but I do still like the IWM. I do still believe we're going to have a strong fourth quarter. And we'll see whether or not this is rinse and repeat, similar to what we've seen over the past, 12 months. 5 days in a row, though, finishing below the open. That's a sign of distribution. So if we were to break down below these levels, I'm probably going to start losing some of my bullishness for the IWM until it turns around and shows me something bullish, because that would be bearish to continue seeing these filled candles and loss of key support. So watch for that. Otherwise, I think the IWM on a relative basis, even though it's been struggling a little bit of late versus the QQQ, I still believe it's going to outperform the QQQ in the fourth quarter. We'll see. So there's the QQQ. Oh, that was the hourly chart I was showing you. Let's move on. I want to go through this chart of the day. So if you like the chart of the day, you like taking a look at certain things that are important keys in the market, could be individual stocks, could be some of these intermarket relationships that I like to look at, could be a gap somewhere. Sentiment, I like to talk about a lot. I do charts of the day that focus on a lot of different areas, really trying to educate, just trying to teach some of the things I've learned over the many, many years of following the market. Here, if you scroll down at Earnings Beats, you'll see an area where you can sign up for free to our Earnings Beats Digest newsletter, which is published 3 times a week, Mondays, Wednesday, Friday. Name, email address. That's all it takes. Hit that subscribe button. You'll be good to go. You can unsubscribe at any time. Not going to hurt my feelings. I do it to try to help provide education. If you don't feel like you're getting anything from it, by all means, stop subscribing. I mean, that's what I would do. All right. So chart of the day today. I have been talking about Intel and how Intel has been really strengthening stock for quite a while. And we've been there have been a few curveballs in this chart because it looked like we had broken out back in June. Next thing you know, we're going down, double top. We start to go back down again. We're below the moving averages. Doesn't look great. But one thing I will focus on is since we made this breakout, look at that AD line. That has been a consistent move to the upside. Even when prices have been going down, the AD line has either been holding its own or moving higher. And I find that to be a very important signal during a period when the stock is trying to right itself back to the upside. And now you can see what's happened after that AD line kept going up and we were sideways consolidating. Intel's been going up, not just going up, but it's been going up. I talked about those filled candles representing closes below the open. Hollow candles are the opposite. That's where you have closes above the open. And I want you to look at Intel. 1, 2, 3, 4, 5, 6, 7, 8, 9 of the last 11 days, we have filled candles. And we've been going straight up. Look at the relative strength now of Intel moving to about a 4-month high versus semiconductors. And I don't think this is a small deal. This is a stock that's been downtrending relative to its semiconductor peers for a couple of years, maybe longer. Let's go back and see how long this thing's been going back or been trending down. It has been trending down since the beginning of 2019, more than 4 years, 4.5 years. Intel has been trending down relative to its peers. Now, maybe this is just a short-term little hiccup to the upside, but with the AD line starting to turn up, as you can see right there, that looks really good. And then you can see semis still holding on to strength. I don't know, it could be the NVIDIAs and the AMDs and some of these others passing the torch to stocks like Intel and Applied Materials and Lam Research. That's what it looks like to me in the early stages. We'll see if this continues, but I really like what's going on in this Intel chart. So I wanted to point that out. All right, it is 9:30. I do want to just mention one chart in particular, maybe a couple real quick. We have a bullish trifecta chart list at Earnings Beats. It's one of my favorites because what it does is it takes only the stocks that are common among three other chart lists. The strong earnings chart list, meaning that in its most recent quarter, it had to have beaten Wall Street's revenue and earnings per share estimates, and it had to be decent technically, had to be liquid, had to meet those different criteria, but it was on the strong earnings chart list. It was also on the strong AD chart list. That's the accumulation distribution, that AD line I was just talking about, and I mentioned quite a few times during the show today. If the stock is on the strong AD chart list, it means that its AD line looks really good. So now you've got a stock that's beaten Wall Street revenues in the last quarter, the estimate, beaten the EPS estimate, earnings per share, has a strong AD line, and the third chart list that it's on, the raised guidance chart list. So not only did it do all that, but the company also raised guidance. And this is a chart list that has 65 companies on. It's a really workable chart list. And it essentially is giving you some of the best stocks in the market right now, in my opinion, unless you have different criteria. I mean, if you got a stock that looks like it's under accumulation, it's beaten revenue and earnings per share estimates, and it's raised guidance, kind of meets a lot of criteria that you probably would want in a stock that you own. Anyway, the one that was the biggest mover yesterday, Confluent, has been consolidating. I actually like this stock. This is one that made a big move up, pretty good volume back May and June, has been going sideways. If we get a breakout above 35, I think this one runs back to the low 40s. So this is worth watching. Volume did tick up a little bit yesterday with that pretty nice action. We are down a little bit today, down a little less than 2%, but this is one that looks pretty good. The other one that I think's been maybe under a lot of radars, SGH, but this is a stock that made a huge move, a pre-earnings run up in May and into early June. Earnings came out, we had a big move, but then what a negative divergence formed, and we ended up sideways consolidating for a while. This was a big leader in the semi space, and they're going to be reporting before the major companies start to report. I wouldn't be really surprised to see this company start to make a little bit of a pre-earnings run, maybe get a little cup action. So I wouldn't be surprised to see a run back toward that 29 level. Anyway, just a couple of stocks there maybe to consider. Those two, along with Intel, Confluent, and then Smart Global Holdings. Those are three that I think look really interesting. And the last two I gave you, Confluent and Smart Global, these are two that really haven't been performing that great, just sideways, kind of momentum sleepers, if you will, that I think could awaken here in the near term. So watch those. All right, let's take a look at what is going on. We'll update this to see where we are. And right now we got the Dow down 57, the S&P 500 down 11, Nasdaq down 46. So the Nasdaq taking a little bit more of the brunt of the hit early in the trading day today so far. Small caps, mid caps down, but not as much as the others. Maybe we'll see a little bit of relative strength there. I don't know. Haven't seen much of late. But sometimes small caps just, they kind of make moves on their own. They really seem to be very independent from the Nasdaq in particular. Maybe move a little bit closer to what happens on the Dow. But anyway, if money rotates more toward value, like I think it will in the fourth quarter, I suspect we're going to see small caps, mid caps outperform the Nasdaq, but we'll see. Anyway, that's it for me. Really appreciate you tuning in. Be sure to go over to Earnings Beat, sign up for our EB Digest. It's free. And if you want to come to our free events, you definitely want to be on that newsletter list, because we reach out to everyone. Anytime we do a free event, we reach out. Also, for those of you that have been following us on YouTube and are fairly new, we want to thank all of you in addition to our regular supporters. We really would love to grow the channel. Make sure you hit the like button below, and also be sure to subscribe to our channel. It certainly would help us. Turn your notifications on. That way, anytime we go live with the show, you'll be notified. Have a great day, everybody. Happy trading.